All right, stock market analysis and projections. I know you've all been waiting for this, and that's what we're going to get at right now. Just do read this slide right over here. This talks about our style of analysis and how you use it for your own trading. And of course, the concept of trade ownership. You must own your own trade. This is the market brief. Markets are quite strong right now. Indexes for the week gaining 3 to 4%. The 4% or 4+% is in the mid caps and the Russells. We've talked a lot about that. For the stock market to be able to move up, it's really going to take a lot of buying in that second and third tier of the market, while the rest of the high caps begin to wander. And I think that's what we're really seeing as money begins to come out of that, and investors looking for ways to invest in some stocks that have been passed by. And that's what I think is going on now. We have had the better core CPI this week, which sent the market up huge. It took like 3 minutes for the S&P's pre-market to be up 100 points on that. And we have good bank and tech earnings that are coming out. And we have, of course, the Israel-Hamas deal that has been signed this morning, and all of that is lifting indexes. But the main thing I think that we're getting here on Friday is that buyers are coming in pre-inauguration. I think that they're anticipating that there's going to be aggressive action by President Trump and team. That is going to be stimulative to the markets. I disagree with that, by the way, and I think that the actions that any tariffs that come, that especially if they're answered by other countries, is going to bring a slowing of the economies. Tariffs are not positive. And if there's a trade war, well, you can go back and look at what happened in 1930 when Smoot-Hawley came out. So tariffs are not bullish. They are probably inflationary at the beginning, but then probably deflationary after that. So we're about to see us come into the first week of the new presidency, and then begin to see how difficult it's going to be to get things done, especially with the potential for Republicans facing off against each other. I think we're going to see a lot of that, and the market's likely to get disappointed. Right now, I'm going to show you what this means. Ghosted cycles are dominating, and that means that the shift that we saw coming at the end of the year and looking at out-of-phase cycles, it's really the original cycles that are dominating. And that's good. It really gets us back in line, and we're getting great guidance out of MDY, the mid cap. So I'm going to show that to you also. So we look at our analysis daily and try to show you probabilistically what the highest odds are. And we change that analysis when the market tells us something different, because we always want to give the highest probability. So there's some changes in here, and you're going to see that. But it doesn't really change the fact that I think the market, which I thought would correct into February in a more intermediate correction, is probably still going to happen. I'll show you that. And really what we're looking at is range trading that's going on, and it's offering hooks for both the bulls and the bears, as the bulls think it's getting ready to go on the upside, and then it just stalls and moves down. And then the bears see it starting to move down, and all of a sudden that stalls and begins to move up again. So we're seeing a lot of that. So that's the brief here, and now we're going to get into the analysis as we look at the stock market. We're going to look at the S&P 500, the NASDAQ, the VIX. There's been a bunch of questions on the VIX. I see another one just came through. We're going to look at the MIDI, the MDY, which is very important to the analysis right now. So important that I put that cycle on all of the other charts for you to see. And then we'll take a look again at the market condition monitor, which Matt just did such a great job illustrating, as he looked at the near term, the things that are changing. I'm going to look at short term, and we'll see how that all sets up. So let's take a look now as we switch over to the charts. We're going to leave the Bitcoin chart here and switch over to SPX. So I'm looking at multiple time frame analysis here, as we're looking at weekly, daily momentum. and the 2-hour chart right over there. Let me get my pointers all up on these right here so we can see what I'm pointing at. And one more right here. So let's start out by looking at the weekly. So this big dominant cycle that you can see right over here troughed right in this area and then began to rally. Now, when the momentum turned over here on the reversal scout, and you can see it, the arrow right there pointing to where that turned over, it sets up a situation where there's a high probability that at least this minor cycle had peaked. Now, the fact that you're getting a big rally over here after getting under the 78.6% right there is really an unusual. That is a lower odds condition that we would see. And if it gets back over that minus 78.6 right there, then we consider that a repaired situation. It hasn't gotten to it yet. The reason that as it gets up here through the 61.8, it has me revising these projections to be a little bit higher. Now, what I've done in here, instead of projecting to some lower levels in here, because I'm not 100% sure where this is going, as far as the depth of the correction, the highest probabilities will get under the 57.74 area, but I want to really illustrate just the direction here of the minor cycle, as you can see. Were it to get up through here, then we're looking at these higher tracks up over there, which are not unreasonable. My high for the year, when you look at the big picture analysis that I did, it was up here at 61.75, much lower than the rest of the street, but that could happen in this cycle right over here. It could happen in the next cycle out over here. So there's this decline over here into February, and then the much bigger decline and much more risk out over here into June. And you can see as we show these downturns in here into that time frame right over there. So for now, momentum is negative in here on the weekly. And then the daily chart is what we want to look at for additional changes. So now we'll switch over here to daily, and you can see on the daily chart that we were looking at the potential at year end. You get a lot of shifting going around. We had a shifted cycle that had bottomed right over here, and here's the original cycle that you see right here. And that is gray because it was ghosted, because we don't really know which of these was the one that was being dominant. Now, this green dash right over here is the mid cap. And again, RV has made the point, I made the point many times, that mid caps, small caps, for the market to be solid, they're going to have to take the lead. And you can see in here this where the mid cap turned up right over here, and I'm going to show you the mid cap chart, that did begin to turn up. And you hear that the reversal scout turns up right over here on the daily chart, and the slim ribbon, which has been negative, is likely to turn neutral, or it may have turned neutral already. So this is the declining phase to that shifted chart. But as you could see, as we get up through the 78.6 and the mid caps driving the upside, it's not likely that this is really the one that makes any sense anymore. It's really the original one that was grayed out right there in line with the mid caps that is driving the upside right in here. And that is a more bullish scenario, and hence the upgrade that we gave it on the weekly chart as it gets up there through the 61.8 and towards the 78.6. This is really the 78.6 there that really follows this track or this track here, which means either a test of this dominant 78.6, that's from this peak to this low, or a test of the high right over here, which would take you out, of course, to that 60, right around 6100 level, right over there. So we have both projections in there to the 78.6 and the 6100. So some people are going to be watching this and say, well, Slim, you said it's going to come down in here into late January. I did say that. Things are changing. Momentum is changing. It's getting better. And the shifted cycle in here is not in play at the moment. As you can see, I left this in here, but that's really not accurate. And I'm going to remove that from there because these are the dominant forces. Remember, we're looking at money flows, and money is flowing into the mid caps and driving these indexes. So that's very clear to me. When I look at the momentum conditions in here, and that shows you where this is turned blue on the S&P 500. It was negative. It is now neutral. So things are improving. If I look at the 2-hour chart, you can see in here where this 2-hour chart was so choppy. And this is what I meant by the bulls and the bears being very caught in the range trading. And that's what's going on right now. And don't be surprised if there's a failure in here and this comes down again. So you got bullish, you got bearish, you got bullish, you got bearish. This is clearly a whipsaw in here. Normally, this is far more consistent and gives you this very good look at staying with momentum. We're in a choppy situation right now, and again, there could be disappointment next week when we look at that. So that's a look at the S&P 500. Now we're going to look at the NASDAQ right in here. The NASDAQ is a very similar situation when we look at this. The NASDAQ is getting up through the 50 and getting to the 61.8, and the momentum in here is still negative. So this is a little bit weaker. Again, this cycle in here points to that there is likely a corrective period that will take you out into January or February. So we might get this failure in a test of these lows in here before it goes up. If you get up through the 78.6, then these levels are in play right in here. 22,100 and 22,700 are where those point up to. So you can see in here that what we've done is I'm extrapolating from this negative momentum and from this downturn in here that this cycle in here is likely to give you that minor cycle pullback again. But then when you get into this period in here, these are the cycles that are in play right there and likely to get some higher moves that you see into that period. So just as I showed in the NASDAQ, in the S&P 500, pull back sometime over here, and then another rally potentially to new highs before this major corrective period out over here, which takes you probably into declines into May and June, and maybe some declines that are very significant. I don't have projections in here as to levels yet because it's hard to put that in. All I have is the cycle timing in here, which essentially says that I'm just going to grab this right over here so you could see sometime between this period here in May and this period over here in June is an important trough or bottom. That means there'd be a decline in here. So we're looking for a choppy situation, potential failure in here, move down, another move up out over here, and then a much bigger corrective period as we look out over here into May and June. So the S&P 500 is very much the same thing when we look at that. Here's the daily chart in the NASDAQ. Again, this is looking at that shifted cycle. This is threatening to get through that 78.6. That's the minor one off of this peak. Here's the dominant one. So if it turns out, as we believe, that it's following the ghosted cycle and the mid cap, as you see right here, that is going to give you a lift that's probably going to take you up towards these levels here. That's 21.8 right there on that dominant level on the 78.6. So this big upside move is coming against this big negative momentum. See where the momentum turned negative right over here and this cycle turned down right here? That was just so clear, and that really helped so much. But we have not really had the upturn in here in the reversal scout yet, and we have not turned blue yet here on the NASDAQ. You see the NASDAQ is lagging what we're looking at in there. I want to now go to the mid cap, the MDY. And you can see in here that this mid cap cycle, the cycles right in here, are really, very important to be looking at. So we see this trough is right over here. As I said, it really is not likely that the low we've seen in the market is going to be the low. It's likely going to get tested. And you see in here, the mid cap is moving up into this resistance area. But at the same time, when we look at the daily chart, you can see in here the upturn and momentum right over here. So the mid cap is really driving. And this is that cycle that I have overlaid on the S&P 500 and the NASDAQ. And that says that it's pretty likely, you know, since we're getting up here through the 50, that we're going to get up here to the 61.8. That's 599. And you notice the higher it goes, the later it goes. It translates to a longer period of time. This is 610 right over here. So this really looks like it's driving the markets to the upside as the small and mid caps take over. And you could see momentum in here has turned neutral. That's looking at the MDY. I see a comment in there from Walter who doesn't like the idea that I'm leaving the Russell out. So we're going to put the Russell in here, and you're going to be able to see that analysis in here. Russell, a little bit different in let me get the 2-hour and the daily. Okay, so the Russell, a little bit different alignments on the cycles, but it's the same story. You could see the rally coming in here too early, getting into resistances, likely to give you this fail out into February, March, and then giving you a period in here where it would be better after that. So the momentum in here in the Russell negative, and you can see in here the momentum in here in the beginning to neutralize on the daily in here gives you this rally. And again, this MDY pushing on the upside right there. So small cap and mid cap going up. And we could see rally here, 2313, 2349. And momentum still negative in there. It hasn't turned up yet, but the momentum has turned up here in the 2-hour chart as we get up in here with the market condition monitor turning neutral right over there. So things are improving when we look at the Russell there. Now let's take a look at the VIX. I'm just going to switch to this chart right over here. The VIX is in a period, and I'm not going to show the monthly, but I've shown it many times, that it's highly susceptible to big upside moves. Now, if you look here, this looks like somewhere around the end of January, and then another upside tick right over there. This is a period where the VIX could just simply, go to the upside at any time. There could be a decline that sets up a big advance. So let's say that the market continues a decline in the market that sets up a big pop in the VIX. Remember, VIX is essentially a measure of the demand for insurance, the demand for puts, and how much people are willing to pay for puts. This says to me that sometime in a week, let's just call it 4 to 8 days, the rally that we're experiencing right now is likely to end and then begin to move down again as the demand for puts then begins to move up again. So this says that there's probably another week on the upside. Let's just go back to the S&P 500 right over here and see, well, how does that align here? Well, we said another further rally over here and maybe another week, and then it begins to move down in this minor cycle right over there. So that's the period the VIX can begin to move up. So if the VIX says, I don't know, 4 to 8 more days, 4 to 7 more days on the upside, for the stock market, I'm going to believe that, kind of time that out. And that's why I'm showing these downturns in here. And again, what I said about a choppy situation and maybe disappointment after the first week of after the Trump inauguration. So I think we're in for a lot of volatility. You could get a pretty good sizable pullback in here into this period here into this early February, and then again try to move up again. So that's a look at the S&P 500 and everything I'm going to show you in the indexes for right now. But I want to look at the MCM in just a moment. And I think that there's important information in there. I'm going to build on what Matt showed on that earlier in the show. Before I get into the MCM is available to you with this level 3 trial, 50% off non-recurring. Best offer really we ever offer to get all of this level 1, 2, and 3 content. Matt looked at it in detail also, and he's going to do a special on it next week that you'll be able to see everything that's available in it on YouTube and for our members. So Matt can write Matt at askSlim.com if you want to participate in that. And do go to the top of the website and click on that special offer for level 3 right there. Sign up right now for $59.50. We're not going to offer this long, and this is the best way for somebody who has never been an askSlim member to come in. It's non-recurring. You're not going to get charged again unless you want to take advantage of the deal we offer you after that. So great opportunity, and please do sign up for that. So now let's look at the market condition monitor, which is for level 3 and 4 service, and you don't need a special platform. I mean, you just access it through the askSlim website. So I'm going to pull up the market condition monitor right here. Now, Matt showed it to you. This is on the trader style. So Matt was looking at the near term right over here. I'm going to look at the short term right over here. So you can see, and what's been going on is that the short-term conditions in the indexes were negative and or neutral. And you can see in here, IWM, which I just showed you, has now become slightly bullish. By the way, we're adding MDY to this list in the next week or so. And the diamonds, remember that the Dow has more of the stocks that would be considered value stocks in it. And so they're outperforming the spiders and the QQQ. And this is really a sign of a rotationary condition that's going in here. And you can see in here, today's the 17th, but on the 15th is where you began to get these upgrades right over here, which is really giving you very, very good information as to things changing. And that's part of why the analysis has been upgraded that we showed looking at the chart. So you can, if you're an intermediate trader, you can see in here that there isn't anything to be really happy about yet. SPY, QQQ still slightly bearish. You have IWM and the diamonds now upgraded to neutral just in the last few days. And, so through the big decline that we had in the SPY and the pullback, you can see in here we went to slightly bearish back in December on the SPY looking at that. So I want to give you just see which are the strongest and the weakest looking at this. There's 130 something of the best stocks you would want to trade in ETFs. So I'm going to go to setup condition right there. And you can see I'm just going to scroll all the way down, and you can see the ones that are in very bullish condition. Take a look at the dates, and you can see where they became very bullish and got upgraded from bullish or from neutral. Not exactly sure where they came from. But those are all very bullish right there. And then you get into the bullish category there. We'll just take a look at everything while they're still green right over here. Slightly bullish right there. So, you can see Qualcomm actually went from bullish to slightly bullish as there are downticks right in there. Same thing for Uber. And those are the ones that are green right over there. That's all the ones that I covered right there. Now let's take a look at the ones that, remember, we're looking at intermediate here, and I'm going to do the same thing for short term in a moment. These are the ones that are very bearish intermediate. Of course, the bond market, believe it or not, NVIDIA is very bearish intermediate. Baidu, Nike, Adobe, Pepsi. Now let's switch over to the short term and give you an idea of how these things are changing and where we are right now. So here's the very bullish ones on the short term. So if you were a trader that wanted to set up like trades over the next few days, you'd be looking at short term and you'd be looking at near term because you want to get those to align. That's what's so good about using this is you do the multiple time frame analysis. So here on the short term, you could see the ones that are very bullish. As you look at that, I'm just giving this all to you right now, and the bullish ones. You really, having this app is really so helpful when you look at that. So these are all bullish right there. Bullish, bullish. I know I'm scrolling fast, but I want to do this kind of in groups so that you can see. Look at how many have turned bullish over this last several days for the short term. Really nice. So many bullish ones in there. That really gives you an idea as to how the market condition has changed to being more positive. It's just, wow, look at all the bullish ones in here. That's crazy. Okay, so now I'm going to switch over to the ones that are in negative condition. And look at that. One is very bearish, Nike. And these are the ones that are bearish right there. That tells you if Nike is very bearish and it has actually had a downtick 3 days ago, that stock is not in good shape when you look at that. These are the ones that are bearish when you look at that. McDonald's bearish, but an uptick from very bearish to bearish. And let's see if there's any Apple. Look at that. Apple is bearish. How do you like that? Well, Apple has not acted well. And Apple's sales in China, they've gone down to number 3 in market share, down 17% in China. And if you think tariffs are going to help that, well, forget about it. And Apple is going to weigh on those indexes most certainly as money comes out of it, and yes, moves into the MDY. So you can see how you can use the market condition monitor to your benefit. I think it's absolutely fabulous. And remember, you can get that by becoming a level 3 member, 50% off non-recurring.